So welcome everyone to this session on wealth management, the industry and technology and how it's disrupting the wealth management sector. It's really nice to hear someone just list out your accolades and not try and cringe out. So thank you to Casey for a great intro. But I'm excited that you've all attended. You must be interested and inquisitive about the wealth management sector and how technology, particularly AI, and APIs are disrupting wealth management. And I'm really keen to have an honest, open discussion with you all. So as Shikazi said, please think of your questions, happy to answer them to the best of my knowledge. And just have an interesting discussion with you all. It should be a good time. And yeah, I'm really passionate about this space because I believe technology can be used for good. I always say that technology is a means to an end. You don't just want tech for the sake of tech, as I'm sure you all know as BCS members. So in wealth management, I believe tech is the means to democratize access to wealth management and mean that more people can invest and invest well, which is actually Seccl's mission. So soft plug there as well. Perfect. I'm not going to talk too much about myself because Shikazi just did that and he gave a great intro. But as he said, my current role is working at a B2B fintech based in the UK called Seccl. We're owned by the Octopus Group, and our vision is to democratize the landscape of wealth management, and we do that by providing an API to enable other firms to launch investment products and propositions. So if you want to launch ISAs and pensions and you don't want to build all of the infrastructure yourself, you can plug in Seccl's API and do so. I've been there for 19 months and it's been a fun ride. I'm working in a scale up that has doubled in size since I've been there. The team has also doubled in size. And we've really got big ambitions to challenge and shake up the wealth management space, which across financial services is one of the more archaic paper-based space, but it's trying to do something different as well. Previous to Seccl, I used to work in consulting, as was mentioned, at PwC. So worked there for a number of years, mainly doing strategy and operational change work, which is as broad as it sounds. So everything from cost reduction projects to expanding into new markets to kind of strategy work based mostly in the UK, but also spent time in Germany in the amazing place of Frankfurt, where there's so much to do, and also in South Africa as well. So I'm really passionate about travel and also seeing financial services from an international perspective. Outside of work, I also run a community and business called the Now You're Talking Network, which is focused on helping women earn more and be more confident. And I'm really particularly love doing that because it's all about connecting women together that work in tech, professional services, financial services, and boosting their energy and support by having a community that they can liaise with and a safe space to discuss things. As was mentioned, I also sit on the board of Girl Guiding, which is the UK's largest charity for women. So again, aligns to my passion around female empowerment. And I also lecture at Imperial Business School around the Fintech program, and recently now at Wharton in the US remotely, which has been a great fun. But that's enough about me because you're not here to learn about me, although I'm happy to take questions at the end. Let's talk about the wealth management sector. So I thought it'd be useful to start off talking about the current state of the industry and where things have kind of evolved to get to. So if we start off just looking at technology and disruption as a whole, I thought it'd be good to start with these three companies. Companies now today are household names, but 10 years ago were just starting out pretty much. TikTok, Coinbase, Uber. And I guess if we look at 2021, where their valuations are, a crazy amount of growth, really interesting to see. And what these companies did is find something that existed already, but use technology to really innovate, disrupt, rise up to the challenge of using tech to enable people to book taxis as and when they want, or to buy Web3 digital assets, or to view the content they want in a short form format. And I guess I show you this slide to say that technology is disrupting other sectors, not just financial services, of course. And I like this case study of Time Warner versus Netflix. So if we cast our minds back to, again, about 10 years ago, 2010, Jeffrey, who was the CEO of Time Warner, said this quote, which is, it's a little bit like, is the Albanian army going to take over the world? I don't think so. So he was saying that about Netflix being bigger than Time Warner. And obviously, as this graph suggests, Netflix is now almost more than double the size in terms of valuation of Time Warner. And what they did was actually own the customer data and the customer journey. At first, they were offering third-party videos and TV series and films on the Netflix platform. But actually, they use all of that data around what people were watching, what people were consuming, when, to create their own content. And they just had this North Star goal of making sure that 50% of all content on Netflix was Netflix-owned content. And when they got to that, that was really what they were striving for, so that they knew exactly what people wanted to see, what movies they enjoyed, and they can produce based on the data that they collected, which is really interesting. And I think this kind of...
I just think about the level of junk you get on Netflix.
Yeah, there's a whole load of useless stuff there. Someone somewhere is interested in watching. But I think it's a really good story of using data, becoming a hub for content, and using data to make informed decisions to produce your own content or solutions as well. And I would say that technology has impacted financial services in the same or similar way. So if we think of old incumbent banks that we all know, JP Morgan, Goldman Sachs, Barclays, Fidelity, and then we think of disruptors that are now almost 10 years old, Monzo, Wise, Free Trade, Revolut. Technology has enabled them to disrupt the financial services space in a really exciting way and improve customer outcomes as a result. So it's arguable, can we say that the disruptors are now worth more than the incumbents? Probably not in financial services. But what's interesting is that 12% of UK adults bank only with disruptors. So they're definitely eating into their market share, and they're definitely disrupting the space, which is interesting. And I thought it'd be worth looking into how that actually happens. So if we look at these companies, what they did is find a USP, a unique selling point. So Revolut did that through FX. They said, okay, when people go on holiday, they really hate the fact that they have to pay crazy commission rates and that they just want zero commission when it comes to going on holiday and be able to spend in different currencies, euros, dollars, whatever. So if we reduce the inefficiency around this particular area, we build our customer acquisition, and therefore then we can start introducing more and more interesting products. So within financial services, we're often talking about kind of unbundling services. So picking a particular area that is really archaic, costly, not done well. And then once you've done that, you've reduced the cost, you've gained the customers, you then can start to bundle the services back. So some of you might have seen the latest thing that Revolut's just launched is Revolut Stays, which is literally Airbnb inside Revolut. So they have a vision to be a financial super app and to include as many different products and services and lifestyle things within the Revolut ecosystem, because again, it's about owning the customer journey, owning more of the share of the wallet, and understanding, okay, how can I know more about people than they know about themselves? Ultimately, scary, but that's what they want to do. And you can see a similar thing that Free Trade did with stock trading. So previously, buying stocks was confusing, complex. People might be using Hargreaves Lansdown and just overwhelmed. But Free Trade said, let me introduce a really nice user experience. Let me make it easy. Let me make it zero commission. Caveats to that, of course. And they solved the problem around that, and they've been growing their customer base as well. Monzo, Starling, Tide, it's done similar around digital current accounts. And again, taking something that is, you can argue is like a really small area of inefficiency, just the customer experience, but it made a massive difference. The fact that I was a really early user of Monzo back when it was called Mondo, and just the fact that I could spend on my Mondo account and literally get real-time notifications, that was something that the incumbent banks hadn't rolled out. That was so amazing to me and so interesting. And one thing I love to see is when you look at neobanks and how often they update their apps, they're doing like 20 updates a week. And then you look on your HSBC app and it's been updated like once in the past 3 months because the way that they're evolving, the way that they're innovating, and the way that they're doing their product delivery is so different. And it shows for the customer. And finally, Wise around remittances and sending money back and forth abroad. So again, as I said, it's about kind of finding a niche, a unique selling point, using that as your story to gain customers, and then bundling back up the services so you can be that one-stop shop. So here is Free Trade launching a SIP, a self-invested personal pension, Revolut's introducing everything, but here in particular, the salary advance feature that means that people can get their salary a few days early, and previously TransferWise, now Wise, launching investments, which is interesting as well. So let's look at this current macroeconomic environment and the impacts on wealth management in particular. And there are a couple of things that I wanted to call out. Firstly, pandemic, inflation, cost of living, the things that we read about in the newspaper every single day, won't dwell on it too much. But this has evolved into a shift in consumer appetite to be more risk averse. People are worried about investing. Why invest when you can open a savings account and easily get 5 or 6%? Those changes in consumer appetite. It was very interesting for me to be a salesperson in an investing company during the pandemic, like 2021, when everyone wanted to buy US tech stocks. Like that was the only thing that people heard about. And this has resulted to a challenge to the wealth management pricing model. So a lot of the fintechs that we support at Seccl, hi everyone, just letting people stress on. A lot of the fintechs that we support at Seccl are changing the way that they traditionally price. So usually in wealth management, you're charging as a percentage of the assets that people hold. They're challenging that because consumers are very price sensitive. They're saying, okay, can we charge subscription models? People are used to the subscription model charging. And as a result, consumers are also interested in more passive investment types, less focused on the growth tech stocks, but also focused on long-term value and also investing according to their values as well. We'll touch on that a bit more later as well. So let's get into the technology, which I know everyone in this room loves and online. And I'm particularly going to focus on APIs and AI. But there's so many other areas within technology that I touch on impacting wealth management and financial services as a whole. I'll focus on those two. So again, not going to teach people in this room what an API is, but for those that might not know, very simply, it's a way for two systems to communicate with each other. And what this enables is the embedding of new products and features into other spaces through third parties. And it simplifies the integration process. And if we think of the last time we used Uber, Uber was made easier because they could use the Google Maps API. And therefore the customers know what that looks like, what that feels like. And again, save them from building out a whole mapping functionality. A very good example of this is Stripe. So I'm pretty sure they're still the largest privately owned fintech. They're not yet public. From San Francisco in the US, got a really nice inception story of two Irish brothers, the Collinson brothers. And their vision was really to just disrupt the kind of complex payments architecture or the use of an API. So very commonly at Seccl, we call ourselves the Stripe for investments, because the same way they made payments as easy as one line of code is what we want to do in the wealth management space.
It's also a Jamaican beer.
Say that again.
Jamaican beer, Stripe.
Really, I did not know that. That's good to know. But here we're talking about the payments products.
Are you sure you've got the copyright to the name?
Is it? Luckily, it's not my name. And so thinking about artificial intelligence, there were 3 areas that I wanted to cover that AI is enabling. Firstly, automation. So the ability to analyze a large amount of unstructured data is really powerful. You can analyze people's goals, their income, and their life situations. Fair enough, financial advisors are doing this already, but AI enables them to do this on a scale that is on a very large scale across a large client base, and therefore analyze individual contrasts. You can also use it to gain insights. So identify the underlying root cause of certain issues based on data again, reducing the cost of producing insights and content. If the AI can spot patterns based on a data set, that frees up the advisor the time to do more interesting things. And again, for portfolio management, you could tell an advisor some of your clients are really heavily exposed in emerging markets or in particular currencies and things like that. And then to make predictions, to forecast based on spend, to optimize client portfolios, and to forecast where assets might go and prices might be volatile as well. I thought it'd be worth talking through 2 use cases similar to Stripe related to APIs, use cases of AI in financial services and around wealth management currently. Firstly, wealthtech. So what they did is they used AI to conduct a large amount of sentiment analysis on customer calls. So they fed some AI, I think around 10,000 call information, and it allowed them to understand through those calls what customers kept ringing them about. And they used that to reshape their product roadmap to see that actually all of our customers are just really unsure what their balance is at the moment. So maybe let's make that a bit more fun and send them a weekly update. And then JP Morgan has recently announced their launching Index GPT, which is quite funny because JP Morgan has banned ChatGPT for all their staff, but they're creating their own, which will be focused on answering questions around financial information and data, which I think is really interesting. So imagine like all of the wealth of knowledge like a Bloomberg terminal might have, or a financial advisor, but being able to communicate in a kind of ChatGPT format is really revolutionary. And then another way that AI has been used in wealth management has been through the use of robo-advisors. Some of the names of which many of us might recognize on the left-hand side, companies like Nutmeg, which is now bought by JP Morgan, Wealthify, Acorn, Money Farm. And they're doing some of the things that we can see on the right-hand side. So automating trading, providing personalized investment advice based on preferences, detecting fraud based on irregularity in when people are investing. Again, for customer service, just very entry-level customer service when people want to know, what does the data say? What does my balance say? I want to rebalance this. Just really simple communication. AI can be used in those scenarios. And enhanced portfolio management, again, kind of rebalancing and looking at adjusting based on economic climates. And so the impact that I believe APIs and AI will have in wealth management I've summarized on this slide. So firstly, democratizing access to wealth. So if I think of what we do at Seccl, which is providing an API for wealth management, so helping people launch investment products and propositions, this means that it's really much more cheap for firms to launch access to ISAs and pensions. And if they can do that, it's much it's cheaper for the end investor as well. So ultimately bringing down costs for everyday investor to invest in the stock market. Secondly, particularly AI frees up time for advisors. And here we mean financial advisors. So as you can see on the right-hand side, advisors typically spend 22 hours per client relationship on admin. That's not what they want to be spending their time doing. Entering and inputting data, this is what this person spoke about in our catch-up today. And doing all of that kind of suitability checking. If they could use AI to do a lot of that kind of data collection, that would free up their time to do the more interesting things and sharing insights and storytelling with clients. And thirdly, helping customers make better investment decisions. So again, thinking about where customers are based on their preferences, their values. Can you make suggestions and little nudges using AI based on comparing their portfolio to other people's? And then APIs being used to help more wealth techs launch quicker and cheaper. That's my leading line as Fintech Growth lead at Seccl is always, we can help you launch an investment Apple proposition in 90 days rather than 120 or however long it takes you. So it's not all sunshine and rainbows. There are obviously challenges about technology in wealth management. So let's dive into what I think are the 2 main challenges. Firstly, AI, the biggest challenge is around just the fact that people want to liaise with humans. It's not always about doing things in the most cost-efficient way, because that sometimes has drawbacks. So I thought it'd be good to start off with this quote that says, 42% of investors agree that AI will never fully take place of human advisors. So they still want that human engagement. They still want that response. They don't want just to be talking to a robot. It's the worst thing ever to talk to a chatbot and it kind of stumbles, it doesn't understand what you say, you get frustrated, you lose your attachment to the business.
Personal service they want.
They want a personal service. So really, I think the future will be around the hybrid nature, which I'll talk about a bit later, using AI to do the boring, mundane tasks, but enabling the people to do the interesting tasks, such as giving the advice, particularly in more complex situations. To develop on that, AI can really struggle to understand anomalies or whether surprise events, the pandemic, it never can predict things like that. Humans can portray honesty and relatability. If someone's been through a bereavement or is going through a divorce, that impacts your financial services, of course. And a human can convey that in a nice way. And actually it's becoming part of legislation. So there's a new FCA regulation around consumer duty, which is pushing for more human propositions and less mass automation to really show that customers are getting the fair value of what they're worth within financial services. The challenge around API, the biggest challenge, I think, is really around the difficulty of working with legacy institutions. As I was saying at the start, wealth management as a whole is not very tech enabled. So when you're thinking about plugging an API into a firm, they need to be ready to use such technology. They might need to use third-party IT firms to help them work together. The first point is really about it not being an off-the-shelf solution. So to use Seccl's API, you still do need to be regulated by the FCA. You can't just, anyone can't just launch an investment proposition, which I'm happy about. It's not yet adopted at scale. It's still relatively nascent, particularly in wealth management. Seccl is one of 2 firms in the UK that is an API first custodian. Many people are still doing it in a traditional kind of more cumbersome way. And the average age of a wealth management client is more than 60. Do they want to be using an app to manage their investments? Some of them might do, but a lot of them might not. And until this kind of great wealth transfer that people talk about happens, maybe technology is yet to keep up.
But a lot of people use independent advisors companies, don't they?
They do.
They probably, it's those people have got to start using AI, I think.
Yeah. A large, so actually in the UK, only 3% of people receive financial advice, which is what we call the advice gap. The fact that 97% of the population doesn't receive financial advice through a financial advisor generally. And that's related to a number of things. That's related to the fact that there's a stigma around talking about money and finances.
Well, you have to pay them as well.
And you also have to pay them. The average hourly cost for a financial advisor is £150. And for a lot of people, they can't rationalize that. They can't think, okay, if I pay £150, what am I going to get out of
well,
it?
they take 1% of the fund each year as well.
Yeah,
So
and the fees can be high as well. So there are some challenges. And then the last point is around general distrust towards new technology. So if you're thinking about relying on someone else's APIs, how do you know that they've got the right 2-factor authentication in place? How do you know that their API isn't going to fail one day and then it impacts your own company? There's a lot of kind of reliance in the industry, and that poses some security risks as well. Time check. Okay, not too bad. So let's look to the future and what I think the future will look like in wealth management due to technology. As I mentioned with AI, I think it's going to be this kind of hybrid model. We cannot rely solely on AI to give financial advice. It's scary that people are already asking ChatGPT for advice to invest in certain stocks and funds. But at the same time, I don't think we should just push this technology to one side and say, let's not use it. The appetite is there. People are using this tech. They're excited. They're interested. So there's something that the tech is doing that kind of traditional financial advisors is not. So how do we bring everything together to the benefit of end customers? So I think the future will look a bit like human advisors still existing, still keeping their jobs, but being used for more complex scenarios where someone doesn't just have, like, let's say £5,000 to invest or to save, but someone has a larger estate or more complex needs. Or more particular needs-based financial advice. So very often people don't need financial advice in perpetuity, but they need it around particular life scenarios. They might need it because there's a bereavement in the family, or they're going through divorce, or they're about to have a child.
Or retirement.
or retirement, exactly. So particular events in their life. And I think AI can really facilitate this hyper-personalized offering. So allowing the AI to analyze the data around the customer's portfolio and suggestions and provide the insights, but enabling the advisors to tell the story and bring it to life and say, actually, if you do this, you can unlock these doors in your personal life in a more human way. So what does the future look like for APIs and embedded investments? There's a nice powerful stat on the right-hand side from my former company, PwC, around the embedded finance market. And this is projected to grow fivefold from 54 billion to 248 billion by 2032, which is quite steep. But essentially, embedded investments is all about integrating financial products and services within an existing brand or user experience. A lot of jargon on there, but what that simply means is if your favorite neobank or if your favorite retailer enabled you to invest via them, that would, for a lot of people, open the door for them to feel interested and engaged around investing. Currently in the UK, only 15% of adults have a stocks and shares ISA, which is quite a rudimentary, like entry-level product when you talk about starting out investing. So there's something that's not quite right there. There's a lot more people that probably should be opening up ISAs, but don't know where to start. They're never going to walk into their bank and say, you know what, I want to open up this ISA thing. They're actually more nervous about doing that. But if their favorite retailer,
it's tax-free. It's the only tax-free investment.
Exactly. But a lot of people don't know what they don't know. Yeah. But if their favorite retailer, Tesco, said every time you shop, we're going to give you round up pennies, and that can go into your ISA, they'd be quite interested and quite engaged, and that could be a way to democratize investments, which is what I'm really excited about. And I think just on this last point, I think why I'm really passionate about this is because in financial services, a lot of products can be sold, not bought. A lot of people are really just panic and they think, oh, I should really just get an ISA because everyone's getting one, but they're not actually thinking intentionally, what will it do for me? How do I align this to my financial goals and plans as well? And I think tech can be the way to change that. So just to expand your mind and share some opportunities around embedded investments. These are 3 examples that are actually happening already. So buying shares in Starbucks when buying your morning coffee from Starbucks. There was a case study done in the US where they did an incentive scheme for every coffee you bought in the morning, you got like 0.01% of a Starbucks share. And for the customers they did that with, they had a 53% increase in spending because they were just like, what? I'm a Starbucks owner now. I'm going to keep buying coffee here, which is amazing for Starbucks, but also in terms of this philosophy of ownership and in creating brand engagement and loyalty as well. Tipping into your Uber driver's pension. That could be a really interesting proposition. Instead of giving tips, could you give those tips that go straight into their pension? Because remember, a lot of these Uber drivers and gig economy workers might not have pensions, might not know about pensions, but that could be a really nice proposition. And actually, one of our companies at Seccl that uses our API, Penfold, has partnered with Just Eat to do exactly this proposition. And rounding up payments and automatically investing your spare change so that you can build wealth. One of our other companies is a company called Chip that is focused on helping people, that has a savings proposition, but also 6 ETFs that are powered by Seccl, allow you to invest in a couple of funds as well. So the possibilities really are endless.
The drops make the ocean.
Say that again, sorry?
The drops make the ocean.
Drops make the ocean. And for a lot of people, the drops are just how they get started on their investment journey. I thought it'd be also worth talking about hyper-customized propositions. I gave that stat earlier that only 15% of UK adults have a stocks and shares ISA, only 3% of UK adults receive financial advice. But when you actually start to dig deeper into the demographics of who is investing, it's actually even worse. So there's a really interesting report from BNY Mellon called the Inclusive Investment Report. And that talks about how 73% of financial products, investment products, are primarily marketed at men. So there's a massive gender investment gap. My favorite worst statistic in wealth management is the fact that if women invested at the same rate as men globally, there would be an extra 3.22 trillion assets under management from private individuals, which is crazy. So we could try and unpick and understand why aren't women investing as much as men. It's a really complex problem. It could be confidence, it could be the marketing, it could be multiple things. But what I'm excited about is that through embedded investments, through APIs, a lot of companies are disrupting and building things in this space. So just to quickly walk through them, Daylight is focused on the LGBTQI plus community. They are a neobank in the US. They've actually just recently shut down. So you can read into it if it's interesting. But again, they were focusing on a particular target market and building features and products around that for that market. Penfold is one of Seccl's companies, and they focus on pensions for the self-employed. Again, similar to the gig economy situation. If you have people that are working for themselves, they're sole traders, or they have really small businesses, they don't know where to start with opening a self-invested personal pension. Penfold has made that really easy. And then particularly around the gender investment gap that I spoke about earlier, there's a company called Your Juno. So if you know any women, definitely encourage them to download the app. It's really interesting. It's basically like the Duolingo, but for personal finance. So has like bite-sized content around teaching women, well, focused on women, about personal finance and investing and saving. So definitely worth checking out. And also hyper customized investments. So there's a trend around impact investing, and one of our companies, portfolio companies that use Seccl called Circa 5000. And what they do is they focus on impact investing and saying that actually a lot of millennials and Gen Z don't just want to invest in the stock market, but when they do invest, they want to make sure that it's aligned to their values around supporting the markets that they want to support, the initiatives they want to support. So they have a range of different ETFs on their platform focused on the planet and people. They have like a clean energy fund that you can invest in. And they're doing really well because, again, they found a niche that has resonated with people. So overall, what I think is that embedded investments will enable kind of a slick and easy way for investments to be a lot less scary for a lot of people. You've gone from the future of kind of now being around kind of the John Lewis Nutmeg partnership, which would enable people to John Lewis customers to open Nutmeg products, to the next being around the neobanks and how they've disrupted the customer experience, to the future being maybe big tech companies opening investment products that people can get involved in. They've done the same thing in credit. They've done the same thing in payments. So I know investments must be next. And it all comes back to this really famous quote within Fintech, which is from Angela Strange, who works at Andreessen Horowitz, which is a really famous firm. And she said a while ago, in the not too distant future, I believe nearly every company will derive a significant portion of its revenue from financial services. And I really believe this. It's the fact that every company will become a fintech, because fintech is, again, a means for people to do things and unlock things in their lives. People save up, they invest because they have an end goal in mind. They're not just doing it charity. And one area that I thought would be interesting just to spice it up and talk about as well is this dawn of kind of, there's this spectrum, right, of people who want to go onto these execution-only platforms, all the way to people who want to use a financial advisor and have more confidence. There's people in the middle that just want a bit of guidance and coaching. So there's a new dawn around financial coaching, guidance, and on-demand advice. I mentioned earlier, kind of needs-based advice is a similar proposition. And again, kind of robo-advice, chatbots can be used to really enable that, which I'm excited about as well.
Is that regulated?
Very good question. It's regulated to a certain extent. So the individuals themselves don't need to be financial advisors because they weren't telling you where to invest. But the companies themselves might have investment products that they will be selling onwards. But it's kind of a bit similar to like the coaching industry, which is unregulated, but just more focused on financial services. Okay, time check, doing okay. I wouldn't be a good salesperson or growth if I didn't talk a little bit about what we do at Seccl, but it's all related, so it's not just a random kind of plug. But our mission statement is to help people invest and invest well. This is where we are today as a company, you know, as a launch. ISAs, pensions, I mean, I'm seeing some faces glaze over, so I won't even go into the detail, but we have close to 1 billion assets under administration across the whole company, which is very exciting. As I mentioned earlier, we're owned by the Octopus Group. So yeah, we're only going bigger and better and really trying to just, as I said, drive this vision of embedded investments and enable people to launch investment products in all sorts of industries, not just financial services, but retailers and beyond as well. And this is the spectrum of firms that we help. So I personally focus more on the fintech side and anyone who's tech enabled and wants to use our API, but we also support financial advice consolidators and what we call kind of the advice tech market as well. Happy to dive into some of this in a bit more detail in the Q&A as well. For anyone who I've whet your appetite talking about embedded investments, I've actually written a whole guide on it, so you can download it, and I can send it to Jacasey to make sure it's distributed around to everyone who's interested as well. That's it. I speak really fast, so I might, if anyone's got any questions, I'm happy to go back. But here's my email, some business cards on the table, and yeah, really appreciate you spending some of your Thursday evening with me. Thank you.
Now there's a Q&A session. So floor is open. You could ask questions.
Yes.
You pulled up the slide about free trade.
Yeah.
I remember free trade coming onto my email probably about 5 or 6 years ago, trying to get people to test the product. And as you say, it's been a pretty successful launch. But are you also offering stock trading without linking to free trade, or are you?
Oh, good question. So yes, we offer trading in equities, ETFs and funds, and it's not linked to free trade. But you could use our solution to build something like free trade.
Yeah.
Any other questions about what I've spoken about, or even just reflections? I don't know if there's anything online as well. I see things in the chat. Should I have a look? Let's see. It might just be I can't hear you and they didn't hear anything. Oh no, it's just notifications.
What about valuations? Let's talk about valuations. Do you think the fintech market's been overvalued? I mean, are you just sold to Octopus? Was that a good time to be cashing out?
What do I think? Valuations are a really interesting thing because they're always somewhat subjective.
Yeah.
I definitely think they've come back to a bit more normality at the moment. If we were talking this time last year, like I literally had anyone and everyone tell me that they raised a pre-seed of like a few million and they wanted to launch the next investing app. Like I was having 15, 20 calls a week with people that were like, oh, I've got an idea. And I'd be like, oh God, great. It's just gonna be another like, oh, I've quit my job and I was working at Goldman Sachs and now I want to do something. But now I think we've come back to a bit more of a normality. I do really think that wealth management can be the next frontier. Like I definitely think kind of, we've kind of been a bit saturated in terms of like neobanks, and we've got green neobanks, we've got the bigger players like Monzo, Starling, Tide, etc. And yeah, there are loads of kind of newer banks now. I definitely think wealth management is still not yet saturated. Again, the stats that I shared earlier, like there's way more people that are interested in investing, passionate about it, know that they should get started, but they don't know where to start along that journey. So I think, yeah, I'm here for more crazy valuations in wealth management. But as I said, the vehicle might not be a kind of bog standard investment app. Maybe the solution is like embedding investments into retailers or into social media apps. An example is Twitter in the US, not saying I agree with this, recently just launched the ability for you to buy stocks, crypto and funds via the Twitter app. So you can literally in the US open your Twitter app and read some tweets about, oh, buy, what's Elon Musk's Dogecoin? And you can literally buy it on the Twitter app. And do I think that's right? Probably not, because loads of people are going to speculate and end up losing money. But does it open up investing to people that maybe wouldn't know how to do that, or never download Coinbase, or never download free trade? Yeah, it does.
I have a question of my own, and one from two questions online.
Okay.
What you just said, that's on Twitter, that sounds like an unlicensed brokerage, which the SEC would be very unhappy.
Yeah.
I've got a question here from Michael Hart. Are your APIs compatible with major core banking solutions, e.g. Tenemos, Finastra or Oracle?
Thank you for both reflections. The first one was around what Twitter is doing. Obviously, I'm not a Twitter representative, but they're using an eToro, which is another like trading platform. A lot of people know they're using them as their vehicle. So it's actually, I believe, an eToro API through Twitter that is enabling people to buy the stocks and the crypto. Again, do I think it's right? Not really, but that's how they've done it. And the second question, yes, our API works. Like I'm in conversations with a lot of neobanks, and it works with banking core systems. I'm also talking to a few banking as a service providers as well, to kind of bring the banking as a service in the wealth side as well.
A follow-up from Michael was, I didn't read that, that was a separate question. On with other cloud banking solutions, e.g. Thought Machine and Mambu.
Yeah, also in conversations with them, it's very possible. The only thing to caveat is Seccl is a regulated custodian in the UK, which long story short means that we can only hold, well, we hold client money in the UK, we hold money in GBP and pounds. And we're not yet a SaaS solution, so we can't take our solution and take it elsewhere. So currently, all of the firms we power, circa 5,000, Go Henry, Chip, Multiply, Penfold, etc., they're all UK-based investing apps or companies.
Go Henry's the one for children, really.
Yes. So alongside their prepaid debit card for kids, they also have a junior ISA proposition, which is powered by Seccl. That means that parents can save up to £9,000 a year for their kids within the Go Henry adult app for their kids, which is great because it's like, again, it opens up investing to parents that I really just wouldn't think, what even is a junior ISA? I don't know what that is.
Yeah. I have another one from an online listener. Excuse me shouting, I want to make sure the microphone picks this up. This is from Ahimi Enhero. Very informative session. Having seen the possibilities of AI in wealth management, which serves as an opportunity, am I right in saying that human advisors would largely be displaced because of the capabilities of AI?
So just to repeat the question for anyone who might have heard, the question was essentially, are we saying that human advisors will be displaced by because of AI? I would say a strong no.
Especially if they like you.
If they're like me, oh, thank you. But no, I would say if I go back to that slide, okay, the clicker doesn't want to work anymore. But if I go back to the slide on hybrid advice, that's what I really think the future is. I think that we shouldn't be trying to eradicate human advisors as a whole. They definitely have a need, particularly around more complex situations, and again, to provide that human element. But like the stat showed, like spending 22 hours per client on admin, no one wants to be doing that when you're just collecting data on people's positions and what they want and their goals and adjusting numbers. Like, let's save an advisor's time and free it up to do the things that they really care about, which is spending time with clients, providing insights, and use AI as the gateway to speed up the insights that they can get.
Just to evolve that a bit, I mean, do you think it will, how do you think it will influence the human advisor's position in the value chain? If AI is providing a greater range of insight and advice, and it sort of pushes an advisor more into a customer relationship sort of position, do you think that sort of changes their role, the scope of their role, or their value that they offer?
I think so. I think you'd have to speak to a financial advisor as to, they all probably have preferences around what part of their role they enjoy, but I would like to think it would enable them to free up their time to do things that are more customer facing, they're things that they enjoy. Any given advisor uses loads of different tech tools. They're just like dealing with, most of the time is that admin and that data collation and information. And if they can free up that time to do more interesting things, I think that will be a good thing. But then again, like some of them, as some of the stats shared, like some of them are just not keen for this kind of technology, and they will always deal with people with more complex situations and prefer the kind of face-to-face, no app, just a desktop version. Maybe just want to look at their investments and have that one session a year where they look at where the positions are.
I missed the presentation because I was dealing with some technology. So I have my own questions. I come from a human-computer interaction perspective, and having given advice in the past, and pretty well forgotten my question already. Oh, crumbs. To what extent? Oh God, I've forgotten my question. I'll come.
It's fine. Yeah. Hopefully it'll come back to you.
Senior moment.
Well, you listed 4 or 5 potential uses for AI within wealth management. Do you think there's one in particular that's probably going to be the first or the leader in terms of breaking that barrier?
Yeah, great question. I really think that, I don't know about anyone else in this room and online, but the speed to which ChatGPT has got people's attention has been like astronomical. Obviously AI is not new technology, but the way that ChatGPT is so conversational, I've used it to plan the holiday that I'm going on tomorrow. I've used it to like do so many different things, to plan for talks and things like that. It's like my personal assistant. And I feel like my mum's even using it, and she can use it, and she understands. And I think that is pretty groundbreaking. And I think that if we can have something like ChatGPT, like JP Morgan's trying to build in Index GPT for lay people, I think that could be really transformative, because I can't remember the stats, but like literally like 1 in every 4 searches on TikTok is like people looking for financial advice. That's very scary. Like people should not be looking for financial advice and suggestions on TikTok, because they will find things that might be inaccurate. But actually what that tells me is that a lot of people are interested, they are engaged, they just don't know where to find that information. So if there was a trusted bot that was being audited to give people insights and advice, it could be an amazing gateway to really disrupt the gender investment gap, the advice gap that we have in the UK and beyond as well.
Yeah. There has been a study published recently that an AI application performed better than any of the portfolio managers in managing a portfolio. So you wonder, why are you paying a portfolio manager when you might as well entrust it to a robot?
Yeah, there's always studies like that coming out, and I think it's so interesting, right? Because then it becomes, really, am I going to pay you 1%? Because if a chatbot can be giving me suggestions, and I'm paying the chatbot, I don't know, £10, whatever.
It's been like the same thing with index funds, isn't it?
Human has had to put that data in. Some financial guy has had to gather that to put in the system, probably.
Yeah.
Okay, with the help of AI as well. But there's a human there element in it, even though it finishes up as AI.
Yeah, I think that's true. Like the AI is not getting data out of nowhere, but its ability to kind of collate a large amount of data and make predictions of that is what people are seeing, and therefore thinking, okay, why am I going to pay something really expensive?
Well,
But
ultimately, escalating all the boring stuff, all the highly structured, and you finish up with a bottom line which advisors can use.
exactly.
The AI.
I do have a separate question. I can't remember the one I was going to ask earlier. How does, and you may have already addressed this, so I apologize. How does your system handle attitude to risk?
Let me think about where to take that question from. So ultimately, if I think about Seccl, so we provide an API for people to launch investment products, so ISAs and pensions. When you're thinking about attitude to risk, part of an advisor process will be doing like suitability checking and making sure that, okay, how old are you? What do you have planned? When do you want to utilize this money? And that will be, that will be doing that kind of risk assessment. So in our kind of value chain, we aren't involved in that because we're a B2B2C company. So we leave that to the firms at their discretion to, and in a fintech and an execution only app, really kind of that risk assessment is really deciding like 0 to 10, like, oh, are you, what do they call it? Like adventurous or cautious, and like consumers make their own assessment or answer a couple of questions, and then they get like a number between 0 to 10 on how cautious or adventurous they are. And that each of those numbers maps to like a fund that is either like adventurous might be all crypto and cautious might be like 100% bonds, or these days might be 60% bonds and 40% equity or something.
I have two questions in a way, and they're not directly related. The first one would be, if someone uses your technology to launch an investment app, do they, and you probably already covered this, but do they have to be licensed on their own, or are you licensed to basically?
Yeah, really good question. They have to be licensed and they need to be regulated themselves. So we're not a complete white label, we're like the level below. So you would need to go to the FCA and get certain wealth permissions, essentially, which I think is right, because then it protects consumers from just anyone launching an investment proposition. But you can also work with like a company called a principal firm, borrow some of their permissions. And that's how a lot of the fintechs that I work with get to market really quickly. They can literally launch within 4 months if they've got the funding, the team, the proposition, the USP. They use our API, they use a principal firm to borrow the permissions, and they launch and get their solution to market.
And the other question that I have for you is around the stat that you have around people looking for financial advice on TikTok. Do you think that that's actually more that speaks more to the interest of Gen Z and younger millennials and their appetite for investment? What would you say about that?
Yeah, it's so interesting. It probably is, because I think the majority of users on TikTok are millennials and Gen Z. I know that 64% of TikTok users are women as well. So I think it is probably a product of that, but it's just really interesting to me that those demographics don't know where else to look, or maybe they just don't find the Financial Times that engaging anymore, that they want like a 2-minute video of someone explaining what stock they should buy. And yeah, it comes with pros that it enables people to engage with topics, but it also comes with like challenges, because a lot of the people on there might not be regulated financial advisors. They literally could be saying anything. Like I watched a TikTok another day recently, and a millennial lady was encouraging people to withdraw from their pension because she thought it was pointless. I was concerned. So I just said, okay, maybe do some research before you follow what this lady is doing. But it's the stuff like, and it honestly had 20,000 views. So like people were interested. She was literally going through like her salary and just like, oh, why is this coming out? Like, take out your pension. And I was like, this is so crazy. But
Right down the pub syndrome.
yeah, honestly.
I have a
That's
question
appeal.
from Ashok online. Obviously on the same. How will large wealth managers compete with fintech companies? Will they take over successful fintech companies and/or mergers between large wealth management companies?
Yeah, fab question. I think we'll have a bit of a like banking era moment in wealth management, and it's happening already. It'll be a mix of both. Just like in banking, you had the larger financial institutions like I believe Meta was owned by NatWest. Like they created their own kind of mini neobanks to start the innovation and build new tech stacks. We're gonna have the exact same thing in wealth management. We're speaking to a lot of kind of traditional wealth management companies to use Seccl's APIs to do exactly that, because they have a tech stack that was built on awful tech like 20, 30 years ago. And they know that to create a new slick app, they can't do that. There's also Doddle, which is by AJ Bell, and it's a similar concept. It's huge AJ Bell creating a new D2C execution-only investing app that is low cost. So I think we'll see a bit of both. And I think it'll be good. Like I think we should have enough investment apps so that everyone who is interested in certain things can access the products and that they want.
Yeah. So do you think the wealth apps, like you mentioned, Go Henry, do you think it has that ability to democratize investing and financial knowledge for younger young adults and children? The reason why I ask is that my son uses Go Henry and I started using it myself, obviously. But do you see that as a trend?
Yeah, I do think they make a really big difference, because it's just people that might not know about investing, seeing the GoHenry Junior ISA app. Every GoHenry customer that I meet is like obsessed with GoHenry. So like if GoHenry launches something, they're going to be interested, they're going to be inquisitive. And through launching their Junior ISA, people have been able to start on their investment journey. So I think naturally it will help democratize that kind of access, which I think is great. And again, they're using Seccl's technology. It can be done in a low cost way. And I think it will be transformative. But do I also think that there's some people that will never get engaged in that way and might need an embedded investment solution? 100% yes. They might only open up when like literally their retailer, Tesco or M&S or Waitrose opens an investment solution that they can use. And that might be their gateway in. Or a big tech company. So like, as I mentioned earlier, like Apple, Amazon have launched like credit products. I definitely think they could do the same thing in the investment space as well. And that will be transformative because people know and love those brands. They'll do anything they say. So if they launch easy access, or if they launch an ISA products, or if they launch an Amazon pension, people might be really interested. Yeah.
Just two questions as well. So we haven't spoken much about, or you haven't discussed the issues around ethics and bias in AI.
Yeah.
Obviously, you know, the same problems that we have, as you said, right? Most products are targeted to men, obviously, being machine learning models and artificial intelligence.
Yeah.
Really, obviously have the same problem as well, because the more data they see, that's how they're going to be trained. So how do you see that impacting, and you know, what sort of checks and balances should probably be
in place?
Yeah,
it's such a good question. And I definitely think we have to have that conversation around, as we mentioned, like AI is only collating data that has its own problems. So it will just propagate the things that we as humans have unconscious biases about. So I think it comes down to the auditing. It's about like, there's case studies of where they've tried to use like machine learning and AI to give people insurance premium quotes, and it literally discriminates based on like people's postcode, which therefore indirectly discriminates based on like race. So it's really sad that those kind of things can happen. So I think it's about auditing, it's about checking, it's about freeing up the time for the human to do the overlaying and the checking.
Yeah. I think the hybrid model probably is probably the best solution to it in a way, because that's sort of that audit trail anyway.
Exactly.
Yeah, sure. The other question, sorry, was more about Seccl. You talked about embedded finance. So what sort of percentage do you see in terms of use cases that you see at Seccl, you know, traditional finance versus embedded, or do you just see no difference at all?
Yeah, I feel like there's a bit of a convergence, to be honest. I feel like embedded investments is still quite nascent. It's still quite new. There's not many players in the space. There's a lot more happening in like Asia and the US, like the Starbucks case study I mentioned. But in the UK, there's a bit of like first mover nerves. Like people are like, oh, should I do this? Also, the cost of living is happening. So is it the right time to be launching this kind of thing? I think there's a lot of nervousness about that as well. So it's probably veering more into like the traditional wealth conversations that I'm having now, but every now and then someone pops up, and it might be even something that's a little bit in between, like a credit checking app. I'm having loads of conversations with the obvious credit checking scoring platforms, where people check their credit score because they've got a goal in mind. They want to buy a house, or they just they've got something as to why they're checking their credit score. But that can be a really short customer life cycle, because it's like, oh, okay, I bought my house, bye. I'm not going to pay for your products anymore. But actually, to retain that customer, can you launch a savings product? Can you launch an investment product? And then it becomes about having more customer engagement, driving your customer loyalty, and ultimately more data so that you can monitor them and know what they're doing, essentially.
One of the things I learned working in the States back in the 90s was that Merrill Lynch launched something called a wrap account. And of course, the beauty there was that it didn't matter whether you bought treasuries or you bought equities, the money always stayed inside Merrill Lynch, because you basically had a current account as well.
Yeah.
And I think, you know, with the wealth management solutions that you're coming up with, the other thing, of course, is to try and capture all the activity of the investor. So once you've got their attention for wealth management, you know, can you capture their buy now, pay later transactions and link it to a current account within the wealth management structure,
Yeah.
rather than having it go outside to a third party.
Yeah, I think that we're always just gonna keep oscillating between like unbundling and bundling services in financial services. It's like, okay, unbundle wealth and then bundle it back up. It's just so funny watching firms do that, because obviously they have to do that in terms of like diversifying their revenue sources and things like that as well. And actually right now, the hot thing to like unbundle and bundle up is like savings. Like if you speak to anyone who has a fintech at the moment, they're like plugging in a savings API through like Flagstone or what's the other one, Bondsmith, probably, because right now you can get an easy access savings account for like 5-6%. That's no brainer. Like you can attract loads of people really easily. You plug in the Flagstone API and it's super easy. So yeah, there's always that kind of unbundling, bundling up. But the ultimate vision arguably should be to be that one-stop shop where you are the Netflix, you produce your own thing, but you also use other people's APIs and data so that you understand what customers are doing.
What are the challenges new financial models based on AI and like get past FCA? What are the challenges? Yes. So if there's a
Can you
new,
say the question again? Sorry.
what are the challenges new financial models based on AI to become products and get them past FCA?
So what are the challenges with AI-based companies with the FCA?
New AI-based products. So if the company has to get past FCA.
Yeah, I think it's honestly all really a new space. Obviously, we had our Prime Minister a couple of weeks ago saying that AI is the future and UK is going to be the new AI hotspot. So there's like the interest and the demand, but the regulation is still catching up. It's a bit like crypto. And for all the reasons that we mentioned around ethics and bias and the regulation is still catching up. So it's really new, and I'm not honestly that close to it to say, but I can imagine there are definitely teams trying to write papers and policies right now as well.
I mean, the AI and ML has been used in financial services and
Exactly.
for a long time, like anomaly detection for transactions and stuff. So it's not a completely uncharted territory. I think the bigger problem is things like the large language models and this new
the generative AI.
generative AIs and how that impacts. I think that's a separate problem to
Exactly.
talk about. But
Yeah.
machine learning and AI has been in use for a while. Yeah.
Agreed. Any other questions? Just share this. What from me?
Right. That's the end of our presentation.